Good morning, traders. It is Friday, May 6th. Thank God it's Friday. Been kind of a nasty week for the market. Let's start off with our previous pick. Actually, we had two of them. Merck was a pick from last week. Didn't quite trigger, but I liked the stock when I did my last video on Monday. You can see how the stock has this nice upward sloping trend line. This is our flagpole. We have a bullish flag formation, earnings before the open, big rally. So I like this stock, but the condition was that the SPY had to close above 430 and we needed the stock to close above $90. Neither of those two conditions were met. However, let's take a quick look at the stock. Fantastic pick. I love it. The market has been selling off hard. What has the stock done? It's treading water near the all-time high. That is the beauty of trading relative strength. Let's say that we were a little bit more bullish on the market, a little bit more aggressive on the market. We would have taken a position here with the market falling apart. We would not have lost any money, but we still would have had plenty of upside if the market would have taken off. So I still like Merck. I do not like the market. We're going to get into that in just a second. My pick of the day, Monday morning, this was 2 hours before the open. I did this recording. WDC. Please go back and check the recording. You'll see that this is where the stock was when I was doing the recording. I was oblivious to the price movement, but if you watch that video, you'll see WDC was on my list of stocks to watch, and it just absolutely popped. I didn't expect any price movement before the open. Hardly anything moves 2 hours before the open, so I wasn't really watching it. But what I did like about WDC was this defined breakout above that downward sloping trend line. I love the fact that we had a double bottom higher low and a breakout. This is almost a cup and handle formation, a breakout through that horizontal resistance. And here's the key. Here's the key to everything that we do. It had relative strength. That is a sign that institutional buyers are out there supporting the stock. Well, so what? So what? We want to follow the smart money. The smart money knows that there's something going on in the stock. They are accumulating shares when the market is down, 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 and tech stocks are selling off like mad, and you see one that's bucking the trend. That is a trail of breadcrumbs that we follow. I can't tell you how many times we have stocks where we get into the position, and because we're able to identify relative strength and we're able to see that institutions are accumulating shares, we take a position, and the next day or the day after, boom, news hits and the stock flies. That is why this system works so well. That's exactly what happened here. There was a spinoff proposed and an acquisition of WDC's Flash business that actually turned out to be quite a nice pick. But to be fair, I can't really call it a winner because the market conditions had not been met, and I really wanted to see the SPY close above 430. So let's get into our market analysis, but let's take a look at that WDC pop right there. If you got in, you did have a chance to make money on that news, and I did post in the description of the YouTube video that there was news pending. So let's get on with it. Let's take a look at the market. We have some new information. We had the FOMC statement came out right here. That is the price action on Wednesday. I was looking for a nice little relief rally. We got it. There were some subtleties, though, that told me we may not get the reaction that we wanted, because back in here, this is the last FOMC statement that was released on March 16th. You can see that Tuesday, before that FOMC statement, the market had already started to lift off. It was preparing. So we had Monday a higher low. Okay, that's kind of nice. Tuesday, buyers are so anxious they can't even wait. So they start coming in and they buy Tuesday, then the FOMC statement. Okay, there's our nice relief rally. Well, in here, I'm thinking this looks pretty similar to what happened back in March. Maybe we'll get similar, but we didn't. I could already see that, uh-oh, here we go. we've got some pretty heavy selling pressure last Friday. And look, we made a new relative low, not a good sign. And then we had further selling on Monday that made a new low for the year. It did turn out to be a bullish hammer, but this was already a sign that we might not get that move. And then Tuesday, the day before the FOMC statement, very, very lackluster. Well, if buyers were super anxious to buy this low on the notion that, hey, we're going to see a really big relief rally, we would have seen a similar candle to that. Open near the low, close near the high, buy. We didn't have anywhere near that level of enthusiasm. Even after the FOMC statement was released, the market flopped around. Let's go into the 15-minute chart and you'll be able to see that clearly. And you can see how we get that final lift off here. But this is what happened after the FOMC statement. Lots of volatility. We don't know if we like it or not. Look at that big drop right here. And then finally, when the press conference started, buyers came in and supported the market. As I told members, the tell would be what happens after the close on Wednesday. What happens to the futures overnight? As a buyer or someone who's looking for a bounce, I want to see a gap higher. I want to see that gap hold with very little retracement, and then I want to start marching higher from that point on. As I told members, I said, if we see a drop, an overnight gap, that will not be a good sign because it'll tell me that this was all short covering and program driven, all fluff, if you will, and that those gains will be given back easily. Long red candles stacked right on the open, massive gap reversal. Within the first hour, we had already given up all the FOMC gains. Nothing but fluff. Sellers are more aggressive than buyers, and we know that yesterday the market had a very nasty day. Now this morning we've got the payroll number came out, 428,000 new jobs were created. That was better than the 395,000 that were expected. S&P futures are up 4 points. Big deal. They were down about 25 points, so it is a nice rally off the low. Everybody's happy that the employment scene is still robust. But if we take a look at the daily chart on the S&P 500, you can see we're testing this low with greater and greater frequency. Yes, we've been able to bounce off of it a couple of times, tails under body, but this is not the type of reaction that we want. We have lots of looming issues. China's economy is slowing down. They are starting to come out of COVID. I believe 70% of the companies in Shanghai are back to normal. And I believe that street traffic in Beijing is back to about 90% right now. So they're getting through all of this, but still tons of container ships. I think 350 container ships outside the port in Shanghai. So this is still going to create lots of supply disruptions. Plus, you have the war in the Ukraine. That's going to weigh on the market. And we have a likely 50 basis point rate hike in June. And the probability of a 75 basis point rate hike is currently around 80%. Seems a little high to me. I don't see the Fed taking drastic measures like that. But even with a 50 basis point rate hike next month, and then subsequent 25 basis point rate hikes, things can add up quite quickly. Right now, we're not getting this bounce. Well, this would be a nice relief rally. Everybody take a deep breath and say, hey, it's okay. Interest rates are still low on a historical basis. So earnings actually have been good. Earnings season has been pretty decent. So we would expect to see a nice little relief rally. We're not getting it. And that tells me that the selling pressure is still very, very heavy. So here's what we want to do. We want to take advantage of this market weakness that I believe is going to take us down to a new low. I'm going to put up my 10p indicator. It works great on a 5-minute basis. Quite honestly, it works well on all time frames. You can see that on a daily basis, we're getting that spike and it's rolled over. This has me thinking that this support is going to fail probably sometime next week. So I'm bearish on the market right now. I'm going to be looking for a bearish pick. So we're going to go in and we're going to take a look at stocks. We can go right into a royal flush bear list. Oof, what the heck is that, Pete? Well, these stocks have sell signals across multiple time frames, M15 all the way up to D1. Really, really good search. So let's go into the daily chart. Let's take a look at this search. And I'm going to highlight coin very quickly. Got a nice breakdown. There you've got a downward sloping trend line, descending trend line, a breach there. These are not as strong as the other variety where you break out to the upside, but also a horizontal support level that's been breached. So it is a weak stock. I would prefer to short something that has a little bit of meat left on the bone, meaning something that is just starting to roll over that has plenty of room to drop. And this sets up really well. This is X, US Steel. You can see, well, let's draw that trend line in for you so that you can see it very clearly. And it goes like that. You can see the 50-day moving average has been breached. We're through the earnings announcement, negative reaction to earnings. That trend line has been breached, and look, the 100-day moving average has also been breached. I like X for a short steel producer. If we do go into a recession, and right now that is the concern, that higher interest rates and slowing economic activity are going to lead to an economic recession, inflation also impeding economic growth. We're through that 100-day moving average. So if I were going to short this, I would be shorting it on any market rally this morning, which we're getting, and I would use that 100-day moving average as a stop. I'm also going to go in and I'm going to run a search in my custom search engine, and we're going to take a look at stocks that, again, are weak versus the S&P 500 on a 30-minute, 1 hour, 2 hour, 4 hour daily basis. We're also going to be looking for a stock that has breached that upward sloping trend line on a daily basis. That means there's an upward sloping trend line that's been breached to the downside. I'd also like to see a stock that's above the 200-day moving average. That tells me that, again, there's some meat left in that move. It hasn't been pounded and pounded down yet. And I also want to have some decent option liquidity, so -3 is your value there. I run that search, and these are your stock picks right in here. I could click through all of them. They're going to be some pretty dang nice stocks. And let's just very quickly do that. Not overly interested in that. Don't see anything right there. This has got a nice upward sloping trend line that's been breached also. Uranium producer, Canada. Costco has been coming up on my list, and you can see how that one is starting to break down right at that 200-day moving average. So yes, I've got a little bit of room, but not much on Costco, but it is breaking through that trend line. So this is one that I like. NUE. Look at how nice and tight that upward sloping trend line is. Through many points, the more touches, the better. It is also breaking down below this horizontal support right here. It is also below the 50-day moving average, and it has plenty of room to go down to that 100-day moving average. I like it short. If you wanted to be more conservative with this play, you could sell an out of the money bearish call spread keying off of that 150 price level, sell the 150s, buy the 155s, do that for a $1 credit, probably be able to go out maybe 2 or 3 weeks and get that type of credit for it. I think that trade will also work and you'll be able to take advantage of accelerated time premium decay. I also like just shorting the stock. I think that the market's going to have a little bit of a relief rally on that unemployment report, but overseas markets were super weak. We've seen selling pressure down here near the low. I don't see a bounce coming right now. I think that the fear of recession is still very great, and I believe that steel producers are going to see some added weakness, and this stock has a chance to get down to the 100-day moving average. I will be reviewing this trade sometime early next week. I'm going to be launching my new website. I'll have lots of information on that as well. When I do my next video, I'm quite confident that NUE is going to be trading below that 141 level. Trade well. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.